4 recent articles absolutely jam-packed with charts and data. So let's kick things off with our first article, why a Bitcoin breakout is imminent.
There's a ton of excitement around Bitcoin right now, and this article makes a pretty compelling case for why a breakout might be just around the corner.
I think what's really interesting about this one is the connection it makes between Bitcoin and MicroStrategy.
Right, MicroStrategy, that company that's basically bet the farm on Bitcoin.
Remember back in September when Bitcoin hit that high of $65,088?
Well, since then, MicroStrategy's share price has gone through the roof, up a whopping 33%. Wow.
Some analysts are even saying that MicroStrategy is almost acting like a tail wagging the dog, influencing Bitcoin's price movements.
It's like they're leading the charge.
Exactly. And the article mentions this massive $7.3 billion short position against MicroStrategy.
Oh, wow.
These short sellers, they're betting that MicroStrategy's price is going to tank, but if it keeps rising, well, they're going to be forced to buy back shares to cover their losses.
And that could push Bitcoin's price even higher.
It's a classic short squeeze, and it could definitely add some serious fuel to the Bitcoin fire.
Like pouring gasoline on an already burning fire.
And on top of that, we've got some interesting technical indicators suggesting that Bitcoin's rally might just be getting started.
Yeah, there's this one signal based on historical patterns that's hinting at a potential surge.
Especially with the U.S. presidential election right around the corner.
Oh, yeah. Things are about to get interesting.
Definitely.
There's this part about Bitcoin options open interest that really caught my eye. It's been surging lately. Yeah. That's often a sign that the smart money is getting ready for a major breakout.
Like they know something we don't.
Maybe so. And if we look at on-chain data, that gives us a glimpse into the actual movements of Bitcoin. We see a pattern that's historically been pretty bullish. An increase in Bitcoin held by short-term holders and a decrease in holdings by long-term holders.
It's like the veterans are cashing out while the newbies are driving the price up.
It's definitely a dynamic to watch. All these factors combined, the short covering, the technical signals, the bullish options activity, and the on-chain data, they all paint a pretty compelling picture for a potential Bitcoin surge.
It's like all the stars are aligning.
All right, let's shift gears for a second and talk about Solana. Our second article, Solana surpasses Ethereum in daily fees. What are the smart trades? Points to a potential power shift in the crypto world. Ethereum's been the top dog for a while, but things might be changing.
Yeah, what really jumped out at me was that Solana is now actually generating more fees daily than Ethereum.
That's a big deal. Solana's daily fees have gone from $2.7 million to a mind-blowing $4.1 million, completely eclipsing Ethereum.
Wow, that's a massive jump.
It is. And it's not just about the fees either. Despite having a smaller market cap, Solana actually has a higher earnings yield, 1.8%, compared to Ethereum's 0.5%.
It's like Solana's punching above its weight class.
You could say that it's generating more revenue relative to its size, which is pretty impressive.
The article even mentions this interesting cultural observation. Some traders are finding Ethereum founder Vitalik Buterin's recent writings a bit too academic. A little over their heads.
Yeah, and Solana, with its focus on speed and user-friendliness, is attracting a different crowd, a crowd that's maybe a little less tech-savvy but still eager to get involved in crypto.
That Solana's the more approachable younger sibling.
And this shift in sentiment isn't just about Solana and Ethereum, it's impacting the entire crypto ecosystem. The article mentions second-tier assets like Jupiter, JUP, and Athena, ENA, that are tied to platforms built on both Solana and Ethereum and how they're being affected too.
So it's a ripple effect.
Exactly. It shows how a change in preference for one cryptocurrency can create waves throughout the entire market.
So we've got Bitcoin potentially on the verge of a breakout, and Solana shaking things up, challenging Ethereum's dominance. But there's another layer we need to consider, the bigger economic forces at play. Our third article, Bitcoin falls short of $70,000. Cause for concern, or haven. Just a pause. Analyzing the market pulse dives into this.
One factor that's been putting some pressure on Bitcoin is the rise in bond yields. The 10-year Treasury yield, for example, has gone from 3.6% to 4.2% since September's FOMC meeting.
And with Trump's chances in the election looking better and his policies likely to boost inflation, things are getting even more interesting.
Yeah, it's a mixed bag.
China's recent stimulus announcement and gold's impressive 27% rally this year are also adding to the inflation narrative.
But it's important to stay calm. The market's probably just absorbing all these new developments, and Bitcoin could easily regain its upward momentum soon.
So it's not time to panic.
Definitely not. One encouraging sign is the massive inflow of stablecoins we've seen this year, a whopping $38 billion, which is even more than the $21 billion that's gone into Bitcoin spot ETFs.
So stablecoins are like digital tokens that are pegged to the value of a stable asset, like the US dollar.
Right, and this continuous influx of stablecoins is a major source of liquidity in the crypto market, and it should help to keep Bitcoin's price afloat.
Now, it's not all sunshine and rainbows. There are some warning signs, too. Ethereum ecosystem fees have recently dropped, which could mean things are slowing down over there.
It could be that rising yields in traditional finance are making crypto yields seem less appealing.
It's like investors are weighing their options.
Absolutely. They're always looking for the best return on their investment. So we've got potential Bitcoin breakouts, Solana on the rise, and the overall economic climate impacting everything. How about we wrap up this part with a look at those who are taking a different approach to crypto investing?
Let's dive into the world of Bitcoin mining stocks. Our final article for today is, despite $12 billion of shorts placed against crypto firms, some Bitcoin miners are attractive. This one takes a contrarian view, suggesting there might be some hidden opportunities in this often unpredictable sector.
What's interesting is that even with Bitcoin closing in on its all-time high, traders have been heavily shorting Bitcoin mining stocks.
Seems a little counterintuitive, Renee.
It does, but there's a reason for it. The mining industry has been facing some challenges, declining margins due to increased competition and the rising difficulty of mining Bitcoin.
So it's a tough business to be in.
Yeah, it can be. But this has made some investors nervous, and that's created an opportunity for those who are willing to bet against the crowd.
To go against the grain.
Exactly. The article highlights CleanSpark, a Bitcoin mining company that's actually surged 39% since being featured in a previous report.
Wow, it's pretty impressive.
It shows that even in a tough industry, there are companies that can not only survive, but thrive.
So there's hope for Bitcoin miners.
There is. And here's another interesting twist. U.S.-based Bitcoin mining stocks could actually benefit from potential deregulation of the energy grid under a Trump presidency.
How so?
Well, it could lead to lower energy costs, which would boost profit margins for miners and make them more attractive to investors.
That makes sense.
Yeah.
But of course, there are always risks involved.
Definitely, Bitcoin mining stock valuations aren't exactly at rock-bottom prices, and the competition's still fierce.
So it's a high-risk, high-reward situation.
Okay, so there's one chart in particular that really stood out to me. It shows Bitcoin's price compared to its previous all-time highs, back in March 2024 when it hit a new high for that cycle.
Yeah, that was a crazy time.
But it struggled to keep up the momentum. Subscribers to the publication were actually advised to take profits at that point.
Oh, really?
Yeah, there was a specific profit-taking recommendation if Bitcoin dipped below $68,330.
And then what happened?
Well, the months that followed were a wild ride, a real roller coaster of volatility. But here's what's interesting. Bitcoin has recently surged above that $68,330 level, and it's successfully tested some key support and resistance points.
So showing signs of strength.
Yeah, it is. And this, combined with the whole MicroStrategy effect we talked about earlier, is giving analysts more confidence in a potential breakout this time around.
Makes sense. And we can't forget about those bullish signals from the options market either.
Oh, right. You're talking about the 1-month 25 delta skew, that measure of implied volatility between put and call options.
It's exactly. The article mentioned that it's been declining toward the lower end of its 2024 range, which suggests a preference for call options.
And that usually means people are feeling bullish.
Yeah, they're betting on Bitcoin going up.